Welcome back to Investing Talk Podcast. Today, we're diving into a really interesting one, a stock that kind of challenges every definition of value, Sealsq Corp.
Yeah, they operate right at the sharp edge of cybersecurity,
Right.
specifically this whole emerging world of post-quantum cryptography.
Exactly. And our mission today is pretty straightforward, isn't it?
Absolutely. We're trying to answer that key question for aggressive growth investors. Is Sealsq Corp actually a good buy right now?
Okay, but before we jump into the analysis, just a quick reminder, if you want us to look into a specific company, please do leave a comment below.
Uh-huh.
And yeah, please take a second to hit subscribe, like this content if you find it useful, and let us know what you think down in the comments. It really helps us out.
Definitely. So Sealsq, the picture our analysis paints, well, it's one of extreme volatility. Our sources don't just call it high risk. They frame it as an asymmetric, speculative opportunity.
Which means huge potential upside, but also significant risk.
Precisely. And the core tension here is how can a company with, frankly, massive negative profitability still be seen as positioned for, potentially explosive growth?
So we need to unpack those wild swings and figure out where the next big growth points might actually lie.
Right. Let's start with the recent momentum, because over the last, say, 90 days, Sealsq has been moving fast, really accelerating everything.
It looks like they're ramping up product launches, partnerships, getting capital in place, all setting the stage for a major market expansion push through the end of 2025.
Yeah. And the first signal that management is serious is their financials, or at least the recent updates. In October 2025, they reported preliminary 9-month revenue, $9.9 million. That's up 41% year over year.
Gives a pretty solid jump.
It is.
Right.
And they back that up by raising their full-year guidance quite significantly. They're now aiming for $17.5 million to $20 million. Impressive range.
Okay, but guidance like that, it needs capital to actually make it happen. And they had a huge capital event in October, didn't they? Almost defining for them.
They really did. This massive $69 million warrant exercise transaction.
Can you quickly explain what that means for listeners who might not be familiar?
Sure. Basically, investors held these rights, warrants, to buy stock at a certain price. They exercised those rights, converting them into shares, and that $69 million went straight to the company's bank account.
So it's a big cash injection.
A huge one, and a big vote of confidence, really. It boosted their cash position instantly to a very strong $220 million.
Wow.
And that kind of war chest is absolutely critical when you're investing as heavily as they are in R&D and global expansion.
And they didn't just, sit on that cash. They put it to work pretty quickly, right?
Yeah.
With acquisitions.
Exactly. We saw that August acquisition of ICALPS. That move immediately gave them more scale in designing custom post-quantum chips, especially targeting sensitive sectors like defense and finance.
And then came the partnerships.
Yep. Following that, they locked in some key ecosystem partners in September, like Weekend Group for financial KYC, Know Your Customer solutions, and also making significant moves in smart energy with Landis Plus Jur.
Why are those partnerships so important? Is it just about sales channels?
It's more than that. It shows they're not just trying to sell a standalone chip. They're embedding their next-gen security into essential high-value infrastructure. That's the goal.
Okay, this brings us to the near-term outlook. The sources talk about the next 3 months having binary catalysts. What exactly does that mean for someone trying to navigate this stock? It sounds intense.
It means the outcomes are likely pretty stark, either success or failure, with potentially huge stock moves tied to each one. It's high stakes. Starting almost immediately, in November 2025, we have 2 confirmed high-profile product launches. First, November 10th, the YSAT 3.0 satellite launch going up on a SpaceX Falcon 9.
Okay.
Then, just 5 days later, November 15th, the launch of their flagship product, the Quantum Shield QS7001 chip itself.
So, getting those launches right, executing successfully, that's crucial for building credibility in this quantum secure space.
Absolutely critical. That's what establishes their tech leadership. And hopefully that momentum carries them into the end of the year.
And looking beyond November.
Right. As we head into December and January, we need to watch for the institutional signals. Things like ETF rebalancing at quarter end and institutional holdings disclosures in December.
That's where we see if big money, the major funds, are actually buying into this growth story.
Exactly. But the ultimate reality check, the bottom line, will be the Q4 and full year 2025 earnings release, expected in January 2026.
Now, because this is clearly a speculative play, we have to touch on the rumors. There are some major unconfirmed whispers mentioned in the sources that could really drive that extreme upside. The big one seems to be around defense.
Yes, the reports, and I stress they are unconfirmed, suggest talks are underway for a potential Tier 1 defense contract with a large European government agency, apparently.
And that plays right into the whole post-quantum cryptography narrative, doesn't it?
It absolutely does. This isn't just about selling new tech, it's about providing a fundamental national security upgrade. The fear is that current encryption methods will become obsolete once large-scale quantum computers arrive.
So landing a major government defense contract would be massive validation.
Huge validation. It signals their technology is seen as an essential, non-negotiable security layer for the future.
And there was other chatter too, right? About M&A.
Yeah. Industry sources are hinting that a large U.S. semiconductor player might be sniffing around, exploring maybe a minority stake or a partnership, specifically looking to get exposure to Sealsq's advanced post-quantum portfolio.
Okay, interesting. But let's pump the brakes slightly. Before anyone gets carried away by catalysts and rumors, we absolutely have to ground this in the current fundamentals.
Agreed. And the sources are very clear about the financial risks. We need to look at those head on.
And they are pretty stark. Massive, immediate red flags. For starters, the trailing 12 months revenue TTM is only $10.98 million. That's actually down, 63.47% compared to 2024? A huge contraction.
It is. And that's compounded by just staggering losses. The net loss for the TTM, $30.44 million.
Wow.
Which translates into a net profit margin of negative 277.31%. I mean, just horrifying numbers on the surface.
Any conventional analyst just looking at that spreadsheet would probably run screaming, right?
You can think so. So the big question is, why is this stock still getting a bullish rating in some quarters? Why aren't these losses seen as just catastrophic?
Yeah, what's the counter argument?
Well, the argument presented by the sources is that this isn't just burning cash, it's a deliberate investment strategy. You're funding the IP, the R&D, the groundwork needed to capture a potentially massive future market.
Like planting expensive seeds for a future harvest, you said earlier.
Kind of like that, yeah. That $30 million loss is heavily driven by intentional, aggressive spending on research and development, specifically in post-quantum cryptography, PQC, and also this RISC-V chip development.
Okay, RISC-V. Can you just quickly clarify for listeners what that is and why it matters here?
Sure. RISC-V is basically an open-source instruction set architecture for chips. Think of it as a fundamental building block. It's challenging the dominance of proprietary systems like Intel's x86 or RRM.
And the benefit for Sealsq.
By building their quantum-secure chips on RISC-V, they potentially gain more design flexibility long-term and maybe lower manufacturing costs down the line. It's about future scalability and avoiding vendor lock-in.
Got it. So heavy R&D spending. That suggests the underlying products must have some strength, right? Do they actually have pricing power?
It seems they do. Their gross margin is actually pretty healthy at 44.76%.
Okay, that's not bad at all.
No, it shows that at the product level, they're efficient and can command a premium for what they offer. Plus, their financial flexibility looks excellent. The debt-to-equity ratio is incredibly low, just 4.6%.
Meaning they aren't weighed down by debt while they're trying to execute this aggressive growth plan.
Exactly. They have strategic options. Management isn't shackled.
So, beyond the financials, the real case for this stock seems to rest on their competitive edge. What actually makes their technology different enough to maybe justify taking on this speculative risk?
I think it boils down to timing and offering a complete package. Their core focus on post-quantum cryptography, PQC, puts them ahead of the curve. This industry-wide transition is expected to really kick off between 2025 and 2026.
And it's not really optional, is it? It's being driven by new security standards, like from NIST.
Precisely. It's driven by necessity and official standards. And Sealsq isn't just selling the physical chip, the secure element.
Right, they offer more than just the hardware.
Correct. They have a whole portfolio. The Vaultic secure elements, these new post-quantum chips, the RISC-V processors we mentioned, and importantly, the necessary PKI and provisioning services.
PKI being public key infrastructure. the system for managing digital keys and trust.
Exactly. And offering those ongoing services is key. It creates that sticky, potentially high-margin recurring revenue. It locks customers into their ecosystem, not just a one-off chip sale.
Okay, let's shift gears a bit to the market mechanics, the stock chart itself. For anyone trading this, it looks like an absolute roller coaster. The 52-week range is, what, 31 cents up to $11?
Yeah, that kind of spread, a 3,448% difference between the low and the high. It's genuinely wild.
Kind of crazy.
It really is. As an analyst, when you see that kind of swing, you immediately see the potential for huge gains, but also the risk. However, despite all that chop, the technical setup right now is actually showing strong bullish momentum.
Really?
Yep.
Even with that volatility?
Yep. The stock is currently trading above both its 50-day and 200-day simple moving averages. That generally confirms a stable uptrend structure, technically speaking.
And the other technical indicators, they back that up?
They do. The combined technical rating from the sources is unequivocally strong buy. It's supported by an 11-to-2 ratio of buy versus sell signals from various indicators.
Okay.
Plus, the MACD indicator is signaling a buy, and that's confirmed by really robust directional strength. The ADX indicator is sitting high at 60.12. Strong trend.
Interesting. And what about market sentiment?
Well, this is often a compelling angle for contrarian investors. The Fear and Greed Index is currently at 39, which is in fear territory.
So people are nervous, but the stock is climbing anyway.
Exactly. It suggests the stock might be climbing that proverbial wall of worry, defying doubt. And often, those kinds of moves can fuel powerful, lasting advances.
And it's big but.
Yeah.
We absolutely cannot wrap this up without hammering home the critical risks. Anyone even thinking about this needs to do their own deep homework.
Absolutely non-negotiable. Risk number one has to be the profitability uncertainty. That timeline to actually making money is, frankly, unknown.
Which means...
It means the potential for future dilutive financing is very real. If they don't gain commercial traction fast enough, they might have to issue more shares to raise cash, which hurts the value for existing shareholders.
Okay, risk one, dilution. What else?
Then there's just the massive execution risk. This is bleeding edge stuff. Developing, manufacturing, certifying, and actually commercializing these highly anticipated quantum secure chips. There's a high risk of delays or hiccups along the way.
Makes sense. Anything external?
Definitely. External factors are huge here. What if the whole quantum computing threat timeline gets pushed out? If those big quantum computers take longer to arrive than expected, the urgency for PQC adoption might slow down.
Or competitors step up.
Or that. If the big semiconductor giants, the Intels, the Nvidias, the Qualcomms, decide to jump into the PQC space aggressively with their scale and resources, that could create intense competitive pressure for a smaller player like Sealsq.
Okay, so pulling this all together, the momentum, the tech, the financials, the risks, what's the final verdict or thesis the sources are presenting to that aggressive growth investor profile?
The overall rating assigned is a bullish rating of 7.5 out of 10, which is high, clearly positive.
But with a major caveat.
A critical warning, yes. This is explicitly flagged as suitable only for aggressive growth investors, people comfortable with high risk and volatility, and who have a recommended investment horizon of at least 12 to 24 months.
Because you're not buying current earnings.
Not at all. You're investing in the belief that a mandatory future technological shift is coming, and that Sealsq will capture a significant piece of it.
And if they do execute well on these upcoming launches and partnerships, what kind of price levels are we talking about, according to the sources?
The short-term target range mentioned is around $8 to $10. That represents, roughly 26% to 57% upside from where it might be trading now, depending on the day, obviously, with this volatility.
And longer term, the bull case.
The longer-term bull case, assuming they really achieve commercial traction and market validation over that 24-month period, is pegged at $12 to $15.
Okay. So this really leaves us with the ultimate decision point for you, the listener, doesn't it?
It does. The whole investment thesis hinges on one core conviction. Do you genuinely believe that the adoption of post-quantum cryptography is going to accelerate significantly in the next 12 to 24 months?
Enough to validate this huge R&D spend, even knowing the ride will likely be extremely volatile.
Exactly. And let's circle back to that ultimate potential upside trigger we mentioned, that rumored Tier 1 defense contract.
Right.
Think about what happens if that actually materializes. Securing that kind of major sovereign-level customer isn't just about the revenue, which would be significant. It's a global stamp of approval.
A game changer for credibility.
Completely.
Yeah.
How would that fundamentally alter the risk-reward calculation? Could that be the catalyst that moves the valuation beyond that $15 bull case target, maybe pushing it towards, say, the $25 range. That's the true asymmetric potential that this kind of speculative investment offers.
A lot to think about there. Thank you for tuning into the Investing Talk podcast.
We'll catch you next time.